look at like next generation, like what's in the horizon, because we're building our own products, right? So we know what's happening in the market today, what's happening in the market a year from now, but what do we think our customers are going to need 3 years from now, 4 years from now? So we're trying to look much further out there, very, I would say big bets in venture on kind of next generation tech. Horizon 4, as they like to say, right? We currently have Horizon 1, 2, and maybe a
Yo, this is Christian D. Evans with Journey with Christian D. Evans podcast. Guys, thank you so much for tuning in and listening to our amazing podcast. This is where we reveal the top 1% of business concepts and systems and processes to scale 8 and 9 figure businesses. We interview top level 8 and 9 figure CEOs, business owners, and amazing TEDx speakers like David Meltzer. We got Nick Cavuto, Pascal Bachman, and so many others. And if you feel like this resonates with you, please share this with your friend, your family, and make sure you impact them as well, because we're trying to spread the message on those that do not know how to scale 8, 9 figure businesses and talking higher level business concepts. So guys, remember, enjoy the episode and be uncommon if you can. Cheers. Thank you so much for tuning into Journey with Christian D. Evans podcast. I'm your host, as always, Christian D. Evans. And boy, we have a very special guest on today. She is an early stage venture investor with over 20 years of experience driving growth and successful exits for early stage consumer and enterprise startups. She has a proven ability to successfully initiate, structure, negotiate, and close strategic partnerships, capital markets, and merger and acquisition transaction, and has deep industry expertise across mobile technology, financial services, telecom, and education. This woman has led investing in VC partnerships in North America and India for M12 Microsoft Venture Fund, and was the executive sponsor of the fund's Female Founders Competition, and so much more. She currently is a managing director of Thomson Reuters Ventures. Please welcome my next guest, the one and only Tamara Steffens. How you doing today, Tamara?
Great, Christian. How are you doing?
Oh, I am doing fantastic. Well, I am so excited about having you on, just because you're just immense amount of experience and expertise. But before we dive into all this, okay, which we're going to be unpacking a lot of fun stuff here shortly about the venture fund and everything that's going on with Thomson Reuters, I want to ask you the journey, right? I believe that there are certain pivotal moments in everybody's journey that were either you had to restructure your belief system. There were growing pains. There were certain failures that you had to learn from that were deep, but helped you become the person you are now. And I just want you to imagine that old Tamara and think about those 1 or 2 that were the most pivotal in your journey. What were those, Tamara?
You know, I think it was when I first decided to go to work for a startup. I worked in tech early on, at both Sun Microsystems and Silicon Graphics, and met a guy by the name of John McFarlane, who was the founder of software.com. And no, we were not a software portal. It was an email company. He went on then to found Sonos, which most of you probably have in your homes, your wireless systems. But John said, you know, I met him and I was working at Silicon Graphics, and he said, you know, we've created this email system where you can have a bunch of email addresses on a single server. And that's going to be a thing. You know, people are going to want millions of users on the same domain. So, you know, as an example, Christian at, you know, I guess Verizon.com, right? And you used to have to break that up. And I said, really? I go, this sounds like great tech. Anyway, turned out to be accurate. I ended up going in and leading sales for them in a very early stage company. And all of my friends said, what are you doing? Nobody's going to get personal email. Nobody's going to get email to their, you know, to some sort of personal address. And they're, you know, going to keep getting voicemail. So it shows you how old I am. But anyway, it turned out to be that, yes, everybody, not only do they have email, they all have 10 email addresses that they use for different purposes over the years. So I would say that was, you know, very telling. And then I moved on to work for another amazing guy by the name of Sky Dayton, who originally started Earthlink and then started Boingo. And once again, people were like, Wi-Fi? Are people really going to use Wi-Fi everywhere on their phones, on their laptops? And I'm like, how else are they going to connect? Because as you know, everybody used to just plug a wire into their laptop, and they certainly just use the cell service on their phone. But two certainly crazy and inspirational founders early in my days in tech, which I think led me to not only want to do venture, but do a bunch of other startups, because both of them were incredibly inspirational.
So during those specific times, what were the limiting beliefs, or maybe the restructure of your own thought process to help you grow through that?
Well, I remember when Sky was telling me, he was like, look, we're going to connect all of these Wi-Fi networks together. So we're literally going to talk to every coffee shop, every hotel, every airport, every public Wi-Fi. We're going to figure out how to connect them all together so that you can have one click and just get onto the system. And we'll charge like a subscription. And I remember thinking, can this really be done? I mean, are these people all going to allow them to connect these networks together? And, yes, the answer was yes, because they could get some revenue back for their Wi-Fi network in the early days. And now Wi-Fi is very much, free in many cases, or, you pay for the simplicity of the access just from a single click. But back then you were paying for it, right? I mean, in the early days, even email, you paid, and when we were at software.com, people were willing to pay, $3, $4, $5 a month for an email address. And that's gone, and you're paying for other things now. But I think, listening to these entrepreneurs say how it can be done, these founders, like, this is the way it can be done. I obviously thought, great idea if you can possibly do it. And in both cases, they, were great engineers and great founders. So they both had tremendous success. Both companies went public, and both did quite well. So I think that was, to me, my first two startups both did quite well. So I'm like, let's just keep doing this, right? It becomes very addictive.
What lessons did you learn, or like what skills? Because see, what's so interesting about what you're just saying is I understand, like, sales, if people don't understand your product, there's a lot of education that you have to, really input on the front end, which of course increases the sales cycle. So I'm curious, definitely with a company that you had to do a lot of education on the front end to explain definitely this new product. And you and I now see that it's integrated into our life so streamlined, but it wasn't there at that point. So I'm curious, what lessons did you learn during that period of time? And I find that so interesting, definitely on the educational aspect, with such a really cutting edge service and product.
Yeah, well, it's interesting because I really think the foundation for both companies and the way they both had really good engineering teams. So, and I think, because I led sales in both cases, I think we both had very good sales organizations. But I think one of the foundations of why both companies did well is, we did our job really well and they did their job really well. And we weren't trying to play both positions. I notice that now, even as a VC, if the CEO is trying to do everything, right? If the CEO is writing the code and doing the sales, it's not going to work long term, right? You got to have people that can play the position. So I would say the lesson learned was first at software.com, but it was repeated at Boingo, where, I like to, it reminds me of a story somebody told me once. They're like, okay, I played softball, I grew up in Michigan, and so, softball, co-ed softball after work, and, grabbing a beer was a fun thing to do. And I remember playing on a softball team that these people were all pretty athletic. They were pretty good, but our shortstop wanted to play every single position. If the ball was going into right field, he would literally run from right field to the, or from shortstop to right field. And I'm like, what? Then we don't have a shortstop. I mean, what are we doing? We were all over the place. Needless to say, that team was not very successful. We had one player who was really outstanding. The rest of us were decent, though. And the thing is, if we would have all played our positions, we probably would have won a lot more games, right? Thank God there was beer after the game, because otherwise it would have been a train wreck, right? But I think that was it. Like, we really tried. Like, they would explain the product to the sales organization in both cases, break it down, lots of really good demos, understanding the value, like you said, the value proposition of why would you buy this product, right? Now, in both cases, I will say there was product market fit because people were getting their own email addresses, right? So, I mean, it was a thing to have, personal email on your, on your ISP, right? So you would, when you got your internet service provider, you would get an email address that would go with that, right? So it was a thing from, overall perspective of that part of the market had already been solved. People wanted it. Why did they want to buy it from us? And what was better about the technology? The engineers did a great job explaining it. Boingo was a little bit harder, right? Because tying all those Wi-Fi networks together and saying, pay me a subscription so you can get, and it's still a thing, by the way, because you can still buy, Boingo, and you can connect on various airplanes, et cetera. So there's still a need for Wi-Fi subscription, but they did a great job of explaining the tech so that we could go out and get all those coffee shops and airports to sign up so that we would actually have a product. So that in position number 2 at Boingo, we had to sell 2 things. First, we had to go sell, hey, take our technology so we can connect your coffee shops together. And then, hey, Mr. Person on the street, you should buy a subscription, right? So it was a very different approach, similar in a lot of ways, but also different, just that it was even more consumer focused than software.com was. So yeah, but both
this is
great
awesome.
lessons.
No, this makes sense. Okay. And so let me ask you in regards to the skills that you acquired, right? And I love what you said there. In the team, right? Each team member has a specific skill or a job requirement that they're better at it than anybody else, right? And I'm curious, with your journey, what did you discover about yourself that you're like, okay, hey, I'm actually better at XYZ than anybody else on the team? And those skills that you obviously really dialed in, you're able to obviously now deploy with Thomas Reuters. So I'd love for you to tell us a little bit about that.
Yeah, it's still sales, right? I mean, it's basic sales. I'm pretty good, I'm a relatively technical person, having grown up in the tech world. But my big question to every engineer who creates a product that I have to go sell is why? Why do I want this? Tell me, how does this work, right? Another company that I was at that we ended up selling to Synchronos was backup software, right? And for your phone. And I'm like, really? Like, why do people need this? And I remember an engineer telling me, we can sell this to any big, telco, Verizon, AT&T, anybody. And I said, why? And they said, well, because everyone drops their phones in the toilet. I go, they do? And they're like, think about it. A guy puts the phone in his pocket and there it goes. And so I'm like, that's my sales pitch. And it was 100% true. So Verizon actually bought so much of the software. It was crazy because they had, tens of millions of people that would go into their store, and their big advertisement was, if you lose your phone, if you drop your phone, if it falls in the pool or the toilet, we will give you your phone back and it will have everything on it. And all you had to do was pay $1 a month to make sure everything was on your phone. That doesn't exist now. We have the cloud, we have different technology, but back then that wasn't the case, right? If you lost your phone, you lost everything, right? And so it's interesting to see how technology, has grown up and how you could sell it along the way. So I think my superpower was really understanding what the value of that technology was, and then developing a sales pitch that was worthy of the dollars I was asking for.
Oh, I love that. I love that because, like you said, it's just simplifying the messaging, right? Just that one little thing, boom, marketing. And then, of course, not only were you able to sell it to, was it Sprint or Verizon?
Verizon. We sold it to Sprint as well. We sold it to everybody, but yes.
So both of them, yeah. But then you were able to help them also deploy that messaging, marketing message that made them differentiate themselves from the market as well, which is incredible. Now I want to talk a little bit and loop in Thomas Reuters, because you guys are doing some very exciting stuff with raising almost $100 million venture capital for a lot of early stage. I want to ask a little bit about the investment thesis a little bit, because your guys' investment thesis is slightly different. than what I've heard before. And I think it's really good for our audience to understand exactly what that looks like, because also Thomson Reuters, because it's such a large company and it's been around for many, many years, people don't contextually understand all the attributes and all the assets that Thomson Reuters brings.
Yeah. So Thomson Reuters is a very large company, publicly traded. We're headquartered in Toronto, but we have big offices. I'm in our New York City office today. And then we also have a big office in Zug outside of Zurich for European headquarters. So, people don't really realize that a lot of times when they think of Thomson Reuters, they think of Reuters, right? The big media company, the photojournalists, what you see in the press, because it is, one of the most trusted news sources on the planet. But it's actually a pretty small part of our business, a huge part of our brand, because Reuters has such a great brand. But Thomson Reuters together, we actually have three big technology angles at the company. We sell a lot of software in the area of tax, a lot of software in the area of legal. So, and think next generation tax, next generation legal, and then risk, fraud, and compliance. So if you think about that, we do a lot with money laundering and work with state and the US government. So that's a super simplified version of what we do, but we do have the biggest legal and tax software practices on the planet. So when we invest, we try to invest in either adjacent technologies or technologies in those verticals where we can really help the founder either through integration or go to market. So we really focus on that. We do look at news and media as well, although it is a smaller part of our overall technology piece. And the Reuters team is very self-sufficient, as most people know. They're probably some of the best journalists and media people out there. But we do look at some new technology in that space here as well. But mostly legal tech and risk, fraud, and compliance, I would say, are the big buckets that we look at, and really where our revenue is generated today as a company.
So with that being said, then, when you guys are deploying that capital in those specific kind of industry and buckets, okay, and you guys come alongside, because it's such a well-established brand, do you guys find, I'm curious, how do you guys look at that? Because I would imagine there's so much deal flow. How do you identify which deal? Because I do know you guys focus on the Series A kind of category a little bit. So there is proof of concept, there is, value prop. They've probably got some revenue established. Help me understand a little bit better about your criteria. Is it really established on around the founder and saying, okay, well, the structure of the personality, do they have previous exits, et cetera? Or is it like also kind of the financials and maybe the proposition of the market? What does that look like?
Yeah, I would say we actually do really traditional diligence, like a standard venture fund, with one exception. Because we have our own tech practices and our own products, we can bring in our head of product for tax or our head of product for legal or our go-to-market for the government sector if we see something we like. And often, even before we make an investment, and not always, but if we have time or they're not looking for their Series A right now, but their product is ready, we're happy to bring them to market with us, right? So there's a really cool company we're looking at right now. We talked to them about 5 months ago, introduced them to our head of product and our go-to-market. They're already integrated into our products that we're taking into the legal space. And you know what? We might do an investment in them now. So it can go in two ways. So because we're a corporate fund and because we're tightly aligned with business development, we often will go ahead and take founders to market. And they love that, right? Because we can show them the value up front. Now, we can move just as fast as a traditional venture fund. So if somebody's raising a Series A, they already have a lead. Our check size is usually 3 to 5 million. And we need to move fast. We will do that. But we still will probably invite our head of product or somebody else to listen to the pitch, because it helps us move with diligence faster, because we've got our own research teams, our own tech teams to be able to help us look at things. They're not part of the decision as far as our investment committee. We do keep that just to our venture fund. We have an investment committee for the venture fund. So we don't get permission, if you will, from product or engineering. That's not part of our process, but it helps us understand if the product is a good fit and if we can help that founder. But we do it as quickly as possible in most cases. So yeah, I think the big advantage of a good corporate fund is who's behind them, right? So I have a huge, research team, engineering team, product teams, lawyers, tax accountants. They all work here, right? So when I'm looking at a company, I can say, hey, look at this new tech. What do you think? It's the best diligence team anybody could ever ask for.
So, okay, so you have, because of your guys' resource, you have a kind of a diligence team, which is nice, and they kind of give you an analysis and data. What are they looking for in regards to a good deal versus a bad deal? What are some of the red flags that say, oh, this is probably not, we should probably go ahead and maybe next quarter or next year to be able to relook at that? What does that look like?
For us, we really try to look at like next generation, like what's in the horizon, because we're building our own products, right? So we know what's happening in the market today, what's happening in the market a year from now, but what do we think our customers are going to need 3 years from now, 4 years from now? So we're trying to look much further out there, very, I would say big bets in venture on kind of next generation tech. Horizon 4, as they like to say, right? We currently have Horizon 1, 2, and maybe a little bit of Horizon 3. So from a venture perspective, we're looking at Horizon 3 and 4. So we'll bring that back in. A lot of times our internal teams haven't even seen, various types of AI or machine learning, or we really love natural language processing, NLP, because we use a lot of that in our legal products. So we really try to pull in, what is the next generation there? And that's it. To us, that's kind of a key part of why we make a decision to invest, right? Yes, product market fit, important, got to have something there so we understand where it fits and how we can help them. Revenue, not as critical, but I would say most now going into a Series A, people do want to see $1 million plus or so in revenue and some sort of revenue waterfall that shows where that's coming from longer term. But we're really no different than any other fund, I think, out there.
Interesting. So, and I'm curious because when I talk to a lot of VCs that are, invest into more of that unicorn style, right, where it's that pre-revenue kind of structure, and they're just kind of looking at it, they rely a lot of their data on the founder, right? It's not so much as the product, the service, whatever it is. It's really the established, the founder, and they put almost like 90% of their data on that. And in Series A, you and I understand that company is at a different point, a different stage. So I'm just curious if you could maybe put in a percentage wise, how much emphasis do you put on the founder? How much emphasis do you put on the financials? And like you mentioned, how much emphasis do you put on the product market fit? Because I do understand when you look at an offer or a deal, it is very contextual. And you have to say there are certain green flags and red flags in each one of those categories that help you determine, okay, yes, this is really good. And you kind of just laid that out a little bit, but I'd love for you to just maybe get a little bit micro with it. Say, okay, well, you give like 33.3, is it all even 33.3% of founder? And you're looking at it and say, okay, they've had success, they've had an exit, they've done this, they've done that. Okay, cool. Check, wonderful. And then they look at the financials, they got $1 million, they got this, they got value prop, they got proof of concept, they got some, letters of intent maybe established for some enterprise deals. So I'm just curious, or is it slightly different? I just love to kind of get a little micro with it.
Yeah, well, by the time you get to a Series A, I would say we're not looking at just the founder, we're looking at the team, right? So who has that founder been able to bring in? So let's say there's 3 or 4, right? So we'll look at the team, and that will be, I would say, 40 to 50%, because you do need to make sure you have that team, as we discussed before. You can't have the shortstop playing every position, right? So we want to know that they brought in a really good CTO or head of engineering, and that the CEO is running the company, and that head of sales becomes a really key person, right, in that Series A, in my opinion, right? Who's going to help them get to the Series B? Getting from an A to a B is all about revenue, right? All about product market fit. So I would say, yes, then we look at the financials. So half of it is the team and the track record of the team, and where were they before? And did that head of sales, as an example, have they done this before? Because that's a hard position to find, right? Somebody who can actually get them from a Series A to a B. So that's really important. And then if you look at it from the other half, I would say, then we look at the product, right? So like we'll try to dig in and see, is this cooked enough that they can actually go sell it, right? So if I look at the revenue, because you could have sold $1 million and really the product's not quite ready. So we will dig in on the product and make sure it really is ready to ship. Because the Series A, you should be able to ship your product, right? That you should be there. And then we'll look at the waterfall, revenue, sales, what do they have for the next year or so? But that ends up being a small percentage of the decision, because first we had to have a great team. Then we had to have some sort of product market fit, right? Shipping, some at least sort of revenue. So if you look at 50, 25, 25, but I still want to see you futuristic, right? So maybe I'm going 50, 20, 20, 10. And the 10 is, show me what your waterfall is, show me what your, what is the total addressable market, right? Everybody comes up with some crazy number. What's real? Like don't tell me you're going to go from 1 million to 50 million in 1 year, right? And we see that. I'm like, that's not going to happen.
I appreciate that. Yeah. And I see that all the time as well with the different slide decks and deals. It's like, oh my gosh, the projections of this. And it's like funny. So I appreciate you unpacking that. I do know it's very contextual, but I love what you said there. It's regarding the team, the financial, the product market fit. Now, I want to ask you, when you guys deploy capital, and you guys take a very active role in that, in that company, right? That startup, whatever it is. Okay. And I'm curious, how do you guys like to see that capital deployed or distributed? Is it more of R&D? Is it more sales? Is it more of building out the infrastructure? And I know it's contextual. It's really dependent upon what that looks like. But is there something that you prefer to say, okay, hey, we like to deploy this capital because we know we want to get a return on investment, et cetera?
Yeah, so we usually take an observer role. We don't take a full board seat. Just that's as a corporate fund, we don't. So we try to stick to our knitting and focus on go to market or product, where that's where we can help the most, right? Is there some sort of integration or go to market we can do? As far as deployment of capital, we will help if asked. We do not want to get in the founder's way, right? There are, generally speaking, while we write a sizable check, because we're usually in a syndicate, there's going to be a pretty good lead in there, right? And, that's one of the things on the surface, we kind of look at who's the lead going to be. Are they going to be a good board member? Because again, we're going to be a board observer, and our value is going to be in integration, go to market, or we will be the customer. One of those three things. And so from that perspective, we try to stick to our knitting and focus on those three areas, and let, other board members, push on the mechanics of the day-to-day. If they ask us, we will definitely jump in and help. But, we don't like to get in the way. We like to do what the founder asks us to do. And usually as a corporate fund, it's to help them sell more stuff.
That makes sense. Yeah, because I do know, and I've talked to some other investors or PE or firms, and everybody has their own way of distributing or deploying that capital, and they like to see what that looks like. And I know it's contextual depending upon what the deal looks like. So I always love to ask that question. So I appreciate you explaining that. I want to mention something here and talk a little bit about this. You on TechCrunch, you wrote a nice, beautiful article about gender diversity and VC funding struggled in 2020. And we talked a little bit offline about this. And I want to bring this up because you and I, we see that there are very few female founders out there in general, right? Let's just start with that as the base. And then I think you mentioned the stat about they only get about 2 to 3% of the deployed capital. Which is very, very offsetting, of course. I love to talk a little bit about I'm just going to say that, and then let you just kind of take it apart a little bit, and why you think that is, how we can obviously help facilitate maybe more growth in female founders, as well deploying the capital to that demographic. Yeah.
So one thing I think that's improving is there are more female founders. So that's good. I think we're seeing more female founders start companies and ask for capital. So I think that's great. But as you said, they're still getting a much lower percentage of that venture funding goes to females or even underrepresented founders. That's a whole nother topic. So I would say, I think it remains an issue, but I do believe it is getting slightly better. I think as we have more female founders in the market asking for funding and more success, I mean, there is some stats that say that female founded companies are more successful, and they've got great, track records. I think as we see that and we see more female founded companies exit the market, either go public or, you look at things like Canva is a great example. I mean, there's, 10 more behind that, but as those become more visible, I think there will be more funding going to female founders. I have to believe it. That's logic. I haven't seen it yet. We funded an amazing company called Priori, 2 female founders. It was our second investment at the fund. And I didn't do it just because they were female founders, right? They happen to be exceptional. Their product is one of the best products in the legal tech space. For acquiring new business for legal firms and for corporate legal departments. So we're excited to have Priori as one of our portfolio companies, and even more excited that it happened to be 2 female founders. But yeah, it's still unfortunate, but I have, high hopes that it's improving.
That's awesome. And I do understand that a lot of the female founders themselves just bootstrap their business and scale still, and very successful in their own right, but they've just been able to bootstrap. Sometimes they may or may not need that capital from a VC or a PE or venture fund, correct?
Yeah, it is true that does happen. The question is, if they would have gotten funding, how much better could they have done, right? And how much faster could they get there, right? So with a little bit of capital, a lot of times you can build your product faster, you can go to market faster. But you're right. There's a lot of successful female founders that have bootstrapped and managed to, get their companies either sold or to the public finish line. And it's just more proof that, female founders are pretty resilient in the grand scheme of things. I think they juggle more than most. That's probably why.
Yeah, they're used to it, and so of course they're just spot on. Of course, you understand that. That's why you could speak on this behalf. I want to ask a little bit about so you guys just fund a little bit and really integrating the technology that we talked a little bit about, right? Thomas Reuters. And I want to just talk, maybe if you could share a few case studies, maybe previous companies that you've acquired, talking a little bit about obviously the smooth transition of integrating that technology, but also the trajectory, because you guys were able to come right alongside that company and those founders and support them in their own right, and just give a few examples of some of the recent transitions or transactions you guys been able to establish.
Yeah, sure. We're a relatively new fund, but I think it's even more proof that I'll give some examples of where we've been able to quickly work with the founders and help them. Our first investment was in a company called Legible, and not to talk about crypto in today's market, it's been a little crazy over the past couple of weeks, but they actually have technology that is accounting for crypto assets, right? Which maybe we need more than ever, given the last 2 weeks of what's been happening. But the reality is we don't have any software that tracks those type of assets in our current technology, but they did. And so we can actually integrate that software into our normal tax package, if you will, so that the accountants and the CPAs and the bigger firms that want and that have customers that have those types of assets that they do have to track and be able to complete the taxes for them or their tax filings, they can use this software. So our sales guys can put it in their regular bag and sell it to any of our existing tax customers. So that was a really good example of technology. Again, it's not crypto, it's actually infrastructure that supports that type of asset from a tax reporting standpoint. So a really good example there. Priori, the female-founded legal tech company that I mentioned, they actually have kind of an automated RFP process so that a corporate law firm could, I'll give an example, like Google could, if they need a specific type of legal talent, say for bringing things into the Port of Louisiana, right? So, you need somebody who understands the law in Louisiana, and therefore you need to understand how to bring goods into that port. You're not going to have that in-house counsel, right? They're not going to understand that. So can I submit, something out there that would then get me that type of legal talent and be able to secure that? And there's a product internally at Thomson Reuters called Legal Tracker, and corporate law firms and big law firms use that to track time. So we use outside counsel for a bunch of different legal tasks, a lot of different legal tasks. And those law firms use something called Legal Tracker to tell me how much I'm spending on my legal spend for different projects and different categories, right? So they've integrated that into their core product that they now have both the marketplace and this RFP. I'm simplifying it for the sake of, getting through the discussion, but they're able to use some of our technology with their own technology, and they just have a great product. I mean, many corporate law firms have picked this up now to solve, a big problem of finding the right legal talent for a specific problem. So it's relatively, I want to say easy, but we do try to really dig in and figure out where these founders who have legal tech or tax tech or risk, fraud, and compliance technology or anything adjacent, how can we help them, right? And so we do a working session early on, right away when we meet them, and say, how can we help you go to market? Which hopefully makes them understand taking our money is going to be valuable to them, not just from a money perspective.
What's interesting to me is how you're able to integrate that in a very smooth transition, right? I'm curious though, because these are these kind of technology for those specific uses, with the founders that you're working with, is there a lot of education on the front end, or do they already see the value and say, yes, we need that, make sure that we're obviously protecting ourselves long term? What does that look like?
Yeah, I would say if they are doing anything related to tax or anything related to legal, they know who we are. So, I mean, we're the biggest player in both of those categories. Risk, fraud, and compliance, although we're a big player there, sometimes we have to do some education in that category. In other categories, sometimes it's adjacent, so they don't know us as well. So we'll say, we're calling on the same person that you call on, and here's the value, right? It's adjacent to what we do, but we can help you, right? So in some cases, we have to do a bit of a education, but I would say if they're in tax or legal, they know who we are.
Yeah, I figured they did, but I was just curious if they saw, integrating that into their platform, et cetera. And what I found so interesting is you guys able to integrate that. And, I don't know the numbers, and maybe you could share, like, obviously the profit margins increase just because you don't have to hire as much, or, do a lot of that is automated, a lot of that is systematic. And maybe you have a manager that does, instead of hiring 10 or 15 people or a very high CPA on the back end for financials or taxes, you're able to really systemize that whole process. Is that correct? Just because you're able to streamline it with your tech?
I would say, yeah, in most cases with legal and tax technology, you're going to reduce either time to market or just cost. But we did just do an investment in a company called DataGrail that really isn't in our wheelhouse specifically, but they sell it to the general counsel in most corporates. So we sell all of our stuff to the general counsel in most corporates. But what they do is they can pull personal information so that if you're, buying something at, I don't know, Target, and you have a Target credit card or a Target red card, and you call them and you say, I need all of my data. I need you to clear it away, right? For whatever reasons, personal reason, or they've had a fraud issue, they've got to be able to do that from a regulatory perspective. Yes, in Europe for sure, and even more so now in the United States. So DataGrail can integrate into all these back-end systems. They have 1,400 plus integrations, and they can, with a single click, wipe away or pull all the data to be able to look at where your name is in that database for Salesforce, for Restoration Hardware, some of those big companies that they have to be able to do this. And it used to take them, 10, 20 people to be able to find your name and where you sat, and every time you went in to buy something, or, in the case of Salesforce, every time somebody's looking you up, on their CRM system. So they save a ton of money, right? Because they've automated the entire process on going out and finding personal information. But they're calling on the same person we're calling on. So we can go into that general counsel together and offer them a solution that's a great fix for the problem we know they have.
It's a holistic approach. I love that, because they're already coming in to service this, and you come alongside and say, hey, well, we can service XYZ, because you're going to, be in that same situation. This is really, really, Tamara, I really appreciate our conversation today. I love the journey of, what you had to go through, but also, the skills, the lessons, and really being able to dial this in, but also the unpacking your guys' thesis and investment thesis and your strategy, and how Thomson Reuters are able to come alongside at a very, very integral part of these founders, really helping them take it to the next level, because deploying capital, but also the technology and streamlining it because of you guys' infrastructure. Tamara, for those that are listening, that want to learn more, that want to maybe see the value, of course, they definitely see the value of it, and they want to have that conversation, or maybe a conversation with your team, how do they do that?
They can email me at just tamara.steffens@tr.com. And I'm on Twitter at Tamara Steffens, so they can DM me there. That's always a good way. Or LinkedIn, link into me at Tamara Steffens and send me an email. And I'd be happy to answer any of those. As a former operator at the two examples I gave you, I do try to really understand from the founder's perspective how to help, right? And what can I do? And I promise not to be the shortstop that will run to right field and try to catch the ball, and play my position to drive their growth and hopefully drive their revenue numbers to where they can get to the next round and be successful. And therefore we can be successful together. That's the beauty of it, right? I think somebody said, I read on Twitter, I can't remember who said it, but they said the best VCs they were first operators. And I like to say, I agree with that 100%. If you've done it yourself and you've had to make payroll and figure out how you were going to get to the next round, you're much more likely to be able to sit down and help that founder.
So valuable, and having those synergistic relationships between the founder and the fund at a very, very high level and a deep level, just not just the financial writing a check, right? It's so much more. Tamara, again, I really appreciate it. Those that are listening, those links are in the description below. Her Twitter account, her LinkedIn, her website, her email as well. Tamara, I really appreciate being accessible like that. That's really awesome. So make sure you guys go ahead and access her and reach out if you have questions, communicate with her, engage with her content as well. And Tamara, before I let you go, again, I really appreciate you being on here. I always love to ask my guests before I let you go, is there any last words of wisdom they like to share with our audience?
I really don't have any words of wisdom, except I do like to repeat again. I think if everybody plays their position, you end up with a much better team. So, and it's teams that win, right? So I do believe in that. And I believe we have a great team at Thomson Reuters, and I look forward to hearing from your audience, and any feedback anybody has, good or bad, I'd love to hear it.
Stay in your lane. I love it. And that's a lot of wisdom. My friend, that is the managing director of Thomson Reuters Ventures, my friend, Tamara Steffens. Guys, that is Journey with Christian D. Evans podcast. Until next time, be uncommon if you can. Yo, this is Christian D. Evans, Journey with Christian D. Evans podcast. We thank you so much for listening to this amazing episode. If you feel and you know that this was valuable to you, please show some love to our amazing guest by liking this, by commenting on this, by making sure that you do a nice 5-star review, and just show some love to our guest. That'd be really awesome. Also, make sure you share this with a friend, a family, a colleague, someone that you believe would bring value to their life right now. And guys, we just want to say thank you again for just being part of our community. If you want to have more resources, don't be afraid. Go to christiandevans.com. You can actually schedule a phone call with me, or you can send me an email at christian.evans@beUncommonIfYouCan.com. That's christian.evans@beUncommonIfYouCan.com. Always love to hear some feedback, and let me know what is the number 1 or 2 things that you are struggling in your business and your life, and we'll make sure we have those conversations. Guys, that is Journey with Christian D. Evans podcast, and until next time, remember, be uncommon if you can. Cheers.